Nvidia also pulling back just a bit as investors digest that news out of the company's developer conference. Shares sitting around $868. And of course, they've got that new AI chip. I mean, I guess let's just kick this off with maybe even just your initial reaction to everything we've heard so far. Jim, I'll start with you. Are you surprised that we're seeing a little bit of pullback on this news? Was it not as, I don't know, as bang up as the market had hoped to hear?
I don't think that's what it is at all. Okay. I think it's just, it's had a hell of a rally, up 75% year to date, and, something like 3x over the last 12 months. So a little bit of profit taking is warranted. Going into this sort of event, you think to yourself, well, what sort of rabbit can they pull out of a hat? And I'm not expecting them to come up with a cure for cancer on that sort of conference that they do. They did what they are supposed to do. They came up with the next chip that they're going to design, the B200, the Blackwell, updates to the operating system that will keep them on the leading edge of AI technology as far as semiconductors go. They did everything they're supposed to do. As far as it pulling back today, that's kind of noise to me. Stock trades somewhere around 35 times forward earnings. I'm looking at FactSet right now, which thinks that long-term earnings growth is 30%, gives you a PEG ratio of about 1.2. That's absolutely fine. So to summarize, I mean, there's nothing fatal that came out of yesterday. Some people may think that at 35 times it's too expensive. And you know what, Courtney, at some point it will be too expensive. At some point that 30% growth rate will fall off. There will be the double and triple ordering that catches up on client inventories, and then they miss demand or something like that. But that's several quarters away. That's not something to worry about today. This is just a healthy profit-taking pullback.
Okay. Shannon, what do you make? What was your reaction from what we heard and what we heard from Jensen Huang this morning?
I wouldn't necessarily disagree with Jim on this. I think, if you look at Nvidia, it remains sort of the easy button in terms of gaining access to the AI trade. And although there will clearly be competition, and if we think about the perspective that inference will become increasingly more important, and there's obviously going to be, in our view at least, more competition there than what Nvidia has in terms of the learning chips. I think one of the things you want to really think about is, are there opportunities to garner this exposure outside of Nvidia and the semis in particular, or even, sort of the Microsoft and Alphabet? Obviously, we had some good news on Gemini earlier this week as well. So I think one of the things is really looking at, to Jim's point, the valuation right now appears justified given the head start, if you will, in terms of what Nvidia has. But this next leg of the AI trade, it won't be quite as easy to determine who the bigger winners and potentially some of the losers will be. And so I think that you're not probably going to get that dispersion or differentiation, though, till later in the year. So for right now, I think this is just a little bit of near-term profit taking. But looking ahead, I think is going to be necessary to capture this next wave of the trade.
Josh, it seems like a lot of the analysts obviously pretty bullish here. Goldman Sachs raising its target to 1,000 from 875. We're sitting right about, I think, 868 right now. Susquehanna going to 1,050 from 850. Does that feel appropriate for you today, even though we're having a little bit of a pullback on the news?
Hey, Courtney, I kind of feel bad for people who have just learned this story in the last year, as so many investors have. It's interesting. You hear people walking around talking about Blackwell chips and stuff who, like, a year ago, you couldn't understand the difference between linear computing versus nonlinear, or why GPUs, which historically were developed for video games, had anything to do with AI, et cetera. So now everyone's an expert. And that's where we have an issue. I'm long Nvidia. I've been long for a very long time. I'm still bullish on the future. But I think the issue that we now have is there's this mass acceptance that they are the platform, 80% market share, et cetera, et cetera, et cetera. Everybody gets that. Who are the new buyers? Is there enough firepower coming in to add another $1 trillion to the market cap here? Because if there isn't, you're talking about price targets of 1,000, 1,050. I want everyone to do this mental exercise with me. On a $950 stock, if it goes to 1050, is anybody throwing a parade? What I like to do with these triple-digit and quadruple-digit stocks is I like to reduce it by 1 point and say this is like a $90 stock going to 100, like big deal. So I think it's going to be really tough for the pace of gains to continue here. I do feel really bad for people who got really excited about it in the last few months. because I don't know how much is left. This is a company that is pulling forward probably 3 to 5 years worth of demand into a single 12 to 18 month time period. They are actively telling governments and Fortune 500 companies, say yes today or get to the back of the line. And guess what CTOs are telling their CEOs? We got to say yes. If we end up on the back of the line, our shareholders are going to think we're schmucks. In that environment, it's not that Nvidia doesn't have opportunity going forward. It's that they are swallowing so many gulps of that opportunity that it's tough to say this is a stock going from $900 to $1,800. And the last thing I want to say on this topic, it really does remind me of Qualcomm in 1999. I think the stock split twice in one calendar year, which is really weird and really insane. And it's not that the bulls were wrong about Qualcomm's opportunity in wireless. It's that they priced it all in, a decade's worth, inside of a year. You have to separate. Is the technology amazing? Of course it is. Is the stock price discounting a lot of how amazing it is? Yes, of course it is.
Very interesting take. Let's actually get some sound from Jensen Huang. He, of course, is the CEO of Nvidia and spoke with our Jim Cramer earlier today. And he says, look, we are more than just a chip company. Take a listen.
If you look at the things that we do, we build the chips, the systems, the networking, and so on and so forth, the entire data center practically, all the software that goes into it. And then we sell it in parts. The reason why we sell, and that is what confuses people. They think that Nvidia is a chip company because we sell everything in parts.
Right.
The reason we do that is so that our customers could integrate Nvidia's technology into their data centers however they like.
Jim, I'm going to get your reaction to that. Do you feel like that is part of why Nvidia has this edge?
Well, yes, but I think actually some of the things that Josh said are spot on.
Okay.
Which is to say that this is not a train that will run forever. The Qualcomm analogy just, up 20-fold in a year and a half at the end of the last millennium. At some point, Nvidia will face the same issues that Qualcomm faced, that any company that catches lightning in a bottle faces, which is to say it has the edge right now. Josh's comments about, CTOs saying we got to buy this now, that's not only what they're doing. They're saying we've got to put in 3 times as many orders as we think we need because we're going to get 1/4 of what we put in. And eventually that will back up and that will bite, in terms of inventories. That's what's more relevant to me. I don't think, by the way, that that's anytime soon. So when we talk about anything that's leading edge for Nvidia right now, this train can run for a little bit further. I don't think it's going to double over the next 12 months, but I think the thing is you have to be prepared, folks, for that quarter that will come, probably 3 quarters from now, maybe 4 quarters from now, where Nvidia says, hey, you know what, demand came in softer than we expected, and it's because inventories have piled up at customers. That will happen.
Whoa, did you catch that intense discussion on CNBC about Nvidia? It seems like the tech giant is facing some serious challenges, but there's more to the story than meets the eye. Thank you for tuning in to InvestMinder, your go-to channel for all things investing. If you haven't already, hit that subscribe button and turn on notifications to stay up to date with our latest videos. Before we dive deeper, let's get the disclaimer out of the way. We are not professional financial advisors, and this content is for educational and entertainment purposes only. It should not be considered as investment advice. Now let's unpack the juicy details about Nvidia's current situation and what it means for investors. Spoiler alert, there are some surprising twists and turns ahead. Get ready to have your mind blown as we explore the real story behind Nvidia's recent performance and what the future might hold for this tech powerhouse. Buckle up because this ride is about to get intense. The discussion on CNBC raised some valid points about Nvidia's potential challenges, but it's essential to look at the bigger picture. While the company's stock has experienced a meteoric rise, driven by the hype surrounding artificial intelligence, AI, and its leading position in the market, there are valid concerns about whether this growth is sustainable. One of the primary concerns voiced by the CNBC analysts is the risk of oversaturation and inventory pileup. Nvidia's chips, which are crucial for AI and machine learning applications, are in high demand, leading to a frenzy among companies to secure their share. However, as Josh pointed out, this demand is being pulled forward, with companies placing orders far exceeding their immediate needs out of fear of missing out. This situation is reminiscent of the dot-com bubble when companies like Qualcomm experienced an unprecedented surge in demand. only to face a harsh reality check when the bubble burst. While Nvidia's technology is undoubtedly groundbreaking, the market's euphoria might be pricing in too much of the company's future potential, leaving little room for further growth. However, it's essential to acknowledge that Nvidia is more than just a chip company. As Jensen Huang, the company's CEO, highlighted, Nvidia offers a comprehensive ecosystem of hardware, software, and services tailored for the data center industry. This holistic approach gives Nvidia a significant competitive advantage, as it allows customers to seamlessly integrate its technology into their existing infrastructure. Furthermore, the demand for AI and machine learning solutions is not a passing fad, it's a fundamental shift in how businesses operate and innovate. Nvidia's dominance in this space positions it as a frontrunner in one of the most transformative technological revolutions of our time. While the pace of growth might slow down eventually, the underlying demand for Nvidia's products is likely to remain strong for the foreseeable future. It's also worth noting that Nvidia is not solely reliant on the AI market. The company's graphics processing units, GPUs, are widely used in gaming, professional visualization, and other applications, providing a diversified revenue stream and potential growth opportunities in adjacent markets. Investing is all about weighing risks and rewards, and Nvidia's story is no exception. While the company's valuation might seem stretched at the moment, its cutting-edge technology, ecosystem approach, and diversified product portfolio make it a compelling long-term investment opportunity for those willing to ride out the inevitable market cycles. While Nvidia's current success is undeniable, it's crucial to remember that the tech industry is notoriously cyclical, and even the most dominant players can face challenges. History is littered with examples of companies that were once considered invincible, but ultimately fell victim to complacency, or failed to adapt to changing market dynamics. One of the potential risks facing Nvidia is the emergence of new competitors. While the company currently enjoys a significant lead in the AI chip market, other tech giants are not sitting idly by. Companies like Google, Amazon, and even traditional chip makers like Intel and AMD are actively investing in developing their own AI-specific hardware and software solutions. Competition in the AI space is heating up, and Nvidia's current dominance might not be as secure as it appears. These rivals have deep pockets and a strong incentive to challenge Nvidia's position, as AI becomes increasingly critical to their core businesses. Another potential concern is the rapid pace of technological change. While Nvidia's current offerings are cutting-edge, the field of AI is advancing at a breakneck speed. New breakthroughs in areas like quantum computing, neuromorphic chips, or even entirely new paradigms in machine learning could render Nvidia's current technology obsolete or less competitive. It's important to remember that Nvidia's success is heavily tied to its ability to continually innovate and stay ahead of the curve. Any missteps or delays in developing the next generation of AI hardware and software could give competitors an opportunity to catch up or even surpass Nvidia. Furthermore, the demand for Nvidia's products is heavily influenced by the overall health of the tech industry and the global economy. A prolonged economic downturn or a shift in consumer spending habits could impact the demand for AI solutions, gaming hardware, and other products that drive Nvidia's revenue. While the current hype surrounding AI is well-deserved, it's essential to remember that hype cycles can be fleeting. Investors should carefully consider the long-term viability of Nvidia's business model and its ability to adapt to changing market conditions. Despite these potential risks, Nvidia's position remains strong. The company has a proven track record of innovation, a talented workforce, and a solid financial foundation. Additionally, the growing adoption of AI across various industries, from healthcare to transportation, provides a massive addressable market for Nvidia's products and services. As we delve deeper into Nvidia's story, it's important to understand the broader context in which the company operates. The AI revolution is not just a technological shift, it's a transformative force that is reshaping entire industries and changing the way we live and work. One of the key drivers behind Nvidia's success is its alignment with this broader trend. By positioning itself as a leading provider of AI hardware and software solutions, the company has become an indispensable partner for businesses seeking to harness the power of machine learning and artificial intelligence. However, Nvidia's role in the AI ecosystem goes beyond just supplying the necessary hardware. Through its comprehensive software offerings and developer tools, the company is enabling a vast community of researchers, developers, and entrepreneurs to push the boundaries of what's possible with AI. This ecosystem approach is a significant competitive advantage for Nvidia, as it fosters a virtuous cycle of innovation. As more developers build applications and solutions on Nvidia's platform, the demand for its hardware increases, which in turn fuels further investment in research and development, leading to even more advanced offerings. But Nvidia's influence extends beyond just the tech industry. The ripple effects of AI are being felt across virtually every sector, from healthcare and finance to transportation and manufacturing. As these industries embrace AI to streamline operations, enhance decision-making, and drive innovation, Nvidia's products and services become increasingly crucial. This broad applicability of AI creates a vast addressable market for Nvidia, one that is virtually limitless in its potential. As AI continues to permeate every aspect of our lives, the demand for Nvidia's solutions is likely to grow exponentially, providing a strong tailwind for the company's long-term growth prospects. Moreover, Nvidia's focus on developing a comprehensive ecosystem positions it as more than just a hardware provider. By offering a complete stack of solutions, from chips and systems to software and developer tools, the company is creating a sticky platform that encourages customer loyalty and reduces the risk of being displaced by competitors. While the current hype surrounding AI might eventually subside, the underlying technology and its transformative potential are here to stay. Nvidia's ability to anticipate and adapt to these shifts, coupled with its ecosystem approach and broad market reach, make it a formidable player in the AI revolution. As we've explored the various facets of Nvidia's journey, it's clear that the company is navigating uncharted territory. The AI revolution is not just a technological shift, it's a seismic event that is reshaping industries, economies, and societies on a global scale. In this rapidly evolving landscape, Nvidia finds itself in a unique position. Its products and services are not merely enablers of AI, they are the foundational building blocks upon which this transformative technology is being constructed. This strategic positioning grants Nvidia a significant competitive advantage, but it also carries substantial responsibility. As a pioneering force in the AI realm, Nvidia has the potential to shape the trajectory of this revolution. The company's decisions, innovations, and ethical considerations will have far-reaching implications that extend beyond the realm of technology and into the fabric of our daily lives. One area where Nvidia's influence is particularly pronounced is in the realm of ethics and responsible AI development. As AI systems become increasingly sophisticated and pervasive, concerns around privacy, bias, and the potential misuse of these technologies have rightfully risen to the forefront of public discourse. Nvidia has an opportunity to lead by example, embedding ethical principles and robust safeguards into the very foundation of its AI solutions. By prioritizing transparency, accountability, and the well-being of humanity, the company can help steer the AI revolution in a direction that benefits society as a whole, rather than exacerbating existing inequalities or creating new forms of harm. Moreover, Nvidia's ecosystem approach positions it as a catalyst for collaboration and knowledge sharing within the AI community. By fostering an open and inclusive environment for developers, researchers, and industry partners, the company can accelerate the pace of innovation while ensuring that the benefits of AI are distributed equitably. Beyond the ethical and societal implications, Nvidia's role in the AI revolution also carries significant economic and geopolitical implications. As nations race to establish dominance in this transformative field, Nvidia's products and services have become coveted assets in the global race for technological supremacy. This dynamic presents both opportunities and challenges for the company. On one hand, the increasing demand for Nvidia's offerings from governments and enterprises worldwide provides a substantial revenue stream and solidifies its position as a global leader. On the other hand, navigating the complex web of geopolitical tensions and regulatory landscapes will require deft maneuvering and a steadfast commitment to ethical conduct. As we stand at the precipice of an AI-driven future, Nvidia's influence and impact are poised to reach unprecedented heights. The company's ability to navigate this uncharted territory with wisdom, foresight, and a commitment to responsible innovation will not only shape its own destiny, but also that of the AI revolution itself. As we come to the end of our exploration into Nvidia's role in the AI revolution, one thing becomes abundantly clear. We are witnessing a pivotal moment in human history. The rise of artificial intelligence is not merely a technological shift, it's a paradigm-altering event that will reverberate across generations, reshaping industries, economies, and societies in ways we can scarcely imagine. In this transformative era, Nvidia stands as a vanguard, a company whose impact extends far beyond the realms of hardware and software. Through its pioneering innovations and ecosystem approach, Nvidia has positioned itself as a catalyst for change, a driving force propelling the AI revolution forward. Yet with great power comes great responsibility. As Nvidia's influence grows, so too does its obligation to navigate these uncharted waters with wisdom, foresight, and an unwavering commitment to ethical and responsible development. By prioritizing transparency, accountability, and the well-being of humanity, the company can help steer the AI revolution in a direction that benefits society as a whole, rather than exacerbating existing inequalities or creating new forms of harm. The road ahead is sure to be paved with challenges and uncertainties, but Nvidia's journey thus far has demonstrated its resilience, adaptability, and unwavering dedication to pushing the boundaries of what's possible. As we stand on the precipice of an AI-driven future, the company's ability to navigate this uncharted territory with grace and purpose will not only shape its own destiny, but also that of the AI revolution itself. Thank you for joining us on this thought-provoking exploration of Nvidia's role in the AI revolution. Remember, at InvestMinder, our mission is to provide insightful and engaging content that empowers you to make informed investment decisions. If you found value in this video, be sure to like, share, and subscribe to our channel for more captivating stories and analyses from the world of investing.
Thanks again for watching, and good luck with your dividend empire aspirations. Hope you found today's analysis helpful as you look for profitable new stock opportunities. This was InvestMinder. Remember, knowledge equals profit in the stock market. Thanks so much for watching, and please hit that thumbs up button if you got value from this video. Make sure you click to subscribe as well to get our next videos when we reveal the best new insider stock purchases. Invest wisely, trade carefully, and we'll see you next time. Disclaimer: InvestMinder is an independent stock market commentary channel for entertainment and basic informational purposes only. We are not licensed financial professionals and do not provide personalized investing or financial advice. P.S. If you stayed watching until here, you are awesome. Thank you for enabling me to keep making these videos with all the likes and subscribes. Have a great day, and we love you all.